So we're going to go through a chart walkthrough of what happens and how you can take, first of all, a risk entry in the market and what to sort of look for. Right. So we're looking at Nasdaq, and obviously we can see that price was tanking lower. And what we then see as price continues to go is that this was the previous lower high that we had in the market, and it was violated to give us a bullish change of character. Excuse me. And then what we immediately see is a pullback where the market sort of gives us a minor pullback in the market, and then we see price even rising higher, breaking this point of structure and showing us that it wants to commit to go even higher. Now, if we look even closer on the 4-hour chart, which of course I prefer to use for following my market structure, you can then see that price moves right into this zone and breaks to give us a higher high, because the candle closes above. It's an impulse, and we're happy to see that. So obviously at this point we're a bit late, because now what we can see is we've got our POIs over here and price has already tapped into them, and we don't know what's taking place. So we don't want to be entering late. We're just going to be patient to wait to see what the market is going to do. So if we just play on, wait to see if we get a higher high. All right, so what we then see is price then goes on to close below our structure. So this was the lowest structural point, and what we're hoping for was this point would not be violated as long as the trend is to continue bullish. But we see that this point was violated and price closed below. So if we look over here, what we now have is a possible bearish change of character, where you might see price pulling back upwards and then continuing downwards, because now our 4-hour is giving us the first hint that perhaps the trend is changing and price is moving lower. Now let's just check to see if this change of character is happening in any sort of higher time frame zone that is of significance. And yes, we can see that over here we're at this low over here where price came in to give us a bearish break of structure, and when it closed below, price is now coming back into this POI to sort of mitigate this POI before price continues lower. Okay, so that's perfectly fine. I hope we're still together there. So if we go back to the 4-hour chart, we can see that this change of character is within the context of what might happen in the market. The market might mitigate and then push lower. So what are we looking for? We're looking for entries to short the market, right? So we now have to identify our POIs from the top. Let me just clear out this POI and move it over there. So right, we've got our first sort of H4 POI, last candle before the last bullish candle before we start to see the market sell off for the sell. This was the last buying candle, and obviously over here we also have our last buy candle before we see the market break structure. Over here as well, we've got this H4 candle, which is another zone where we see buying before the selling off, and the very last candle where we see buying before the change of character takes place. So we've got a number of times where we're seeing the market sort of buying before it sells to move down, because the entire move to break structure is this one. So we've got a number of times where you see the market maker sort of buying before they sell, and we want to know where exactly they may turn the market and come in to close their order. So what we're going to do is we're going to go to the 1-hour chart, which is what I then prefer to do, to look for other internal POIs that may be respected and to refine our POIs. So starting from the top over here, what I'll do is I'll pick this point over here. Why? What we can see and appreciate is this is sort of our last candle, last buying candle before we see some significant momentum that tanks. But I also incorporate the high as we've been doing in our previous videos. Okay, so this isn't rocket science. There's no need to overthink it. You just need to draw what you draw at the time and make sure it's something that you can consistently do and you're happy to do. Right, there's no rocket science to it. Then over here, this is our last buying candle, obviously, before we see the sell, so we can just refine to just that candle, right? And then over here we still have this huge candle that's over there, which sort of covers a very big portion of the buy to sell candles over here, and it's fine, we can include that. And then our last buy candle over here was this one, right? So what do we wait for? We obviously want to find ways to eliminate certain POIs so that we don't have certain POIs. Again, also, if we look over here, we can see that we've got another internal POI, which is an H1 POI that could get respected. It was mitigated at this point, but if we start our process of using our confluences to eliminate POIs, what are we going to find? Number one, we're going to find that right here we've got some imbalance, like so. We've got some imbalance, and let me illustrate. So right before our buy to sell candle over there to this point, we've got imbalance that was never filled. All right, so I wouldn't take this particular POI as a good POI, because there's a chance that price is going to want to fill this imbalance before price drops lower. So I'm going to eliminate that POI. Secondly, we can also see that over here we also have some imbalance right over here. And where do we see that imbalance? We see it on the last candle there before price tanks, and to this point where we see that obviously with the white candle that was here, but we see price tried to cover the imbalance and it left a gap. All right, so this means automatically this POI is not a good POI to be looking at. Why? Because it's sitting right below some imbalance in the market. Okay, so let's just wait for price to play and also see whether these POIs are within our premium zone, because we're trying to sell and we might discount these higher time frame POIs and whilst they're still there. So let's just wait for a change of character. So what we do is we're going to be watching our most recent lower highs to see if they are broken. All right, once they're broken, there's a good chance the trend has changed and we might be seeing that a retracement taking place. All right, so in this case, wow, so we've got a single candle that covers all 1, 2, 3, 4 bearish candles, pushes up, fails to close above, but wicks above to show us that there's a chance that we might be having a change of character taking place, right? So we don't want to be trading this one. Why? Because it's not within any higher time frame sort of POI over there. So we don't want to be trading the change of character. We're just going to let it be and wait for the trend to show us a selling opportunity, right? So too, if we're convinced that this is our first change of character, we need to draw in our premium discount tool, right, from the top, where the highest point from which we started to see the selling and the lowest point from which we believe the retracement is starting. And then we look for selling POIs that are in the premium zone. So obviously this POI is right, it's coming from below right to the equilibrium price. So we are not really interested. In any case, it was sitting below the imbalance. So we're going to eliminate. This one is way too much within the discounted price and has already been annihilated anyway. So we are going to remove that. So it means now we've got two POIs to sort of look at. All right, so I'm just going to remove this and remove these lines so that we have a very clear chart. Right, so these are the 2 points that we're looking at taking our entries from. So now the question is, if we have these points, how do we take our risk entries? Right, so for me personally, because I'm a 50% type of guy, I'm going to just come on, divide my POI into 2 and work on my sell limit and do it this way, and then work on my 50% of this high as well and work on another sell limit. Right, these are all points where I believe price could turn. I've made peace with the fact that there's a high probability that price could come back up, break this POI and respect this POI. I've also made peace with the fact that price could break this POI and break this POI as well, and I could suffer 2 losses without enjoying any sort of profit from this move. So I'm happy to just let the market be the market and let my edge play out. All right, so where am I looking to take profits? I'm looking to take profits right at the point where the move started. This one would be a 1 to 9 and this one would be a 1 to 16. So whilst I wait, I'm just going to drag this upwards, and then I'm going to wait for the market to come into my POI and see if it's going to respect my POI. All right, so let's play price and see what happens next. Okay, so price is pushing up and then it doesn't it feels some of the imbalance there, but we don't see it tapping into our POI, so we're just going to be patient and then it happens. So price is just tapped into our POI now, and we're going to we're already in the trade, we're in the money. At some point I believe we've already seen a 1 to 5 position. If you're one who's happy to take your profit, when you say a 1 to 5, you would have closed the trade. If you want to wait for the TP and manage your risk accordingly within the trade, then you're fine. You're going to be patient and you're going to wait for the market to make its move. All right, and what do we see? All right, there we see our TP hit for 1 to 9. If you're risking $1 on the trade, you just made $9. It's reasonable, and this is very good because at the end of the day, even if you were to take a loss on this trade and you were to see a 1 to 9 from here, it would still be well and over your risk. All right, now let me just show you something interesting that has also happened. So this is our first risk entry. Right, we can also see that we see a confirmation opportunity that presents itself, where you may ask, let's just play price backwards. So as you can see, when price was moving up here, it tapped into the POI and came in and broke this last or previous higher lows, like so. Right, this is the point where we see our bearish change of character to show that maybe price is ready to move to the downside. It comes with so much momentum. So what are we going to do? We're going to simply identify this POI over there, right to the high, and as you can obviously see, there is also some imbalance that is formed right as the selling was taking place, where you may ask, the last bullish candle there and the next candle that was here, but some of it has been satisfied, so it's fine. Right, So let me just move this one a bit to the left because it's been triggered already. So this is the POI where we're watching for price to come in and continue to the downside to hit our take profit over there, right? So we've seen our change of character on the H4. It also obviously appears on our M15 even clearer. Price gives us a high low, pushes up, breaks structure very impulsively. So we're going to wait for price to come back in here and fill our imbalance. So I'm happy to use the 1 hour order block because I prefer the higher time frame order blocks. I find over refining sometimes can cause you to miss trades, and also sometimes those 15-minute order blocks or POIs sometimes are not respected. Only the higher time frame OB or POI will be respected. All right, so I prefer to just use the higher time frame range since I'm trading a higher time frame move in any case. Now, if we were going to be the guy who was going to draw the 50% or median price of this POI, you would do this and then you would work on your uh, pending order there, and you'd be waiting for your trade to be triggered, and then you move. If you're the guy who was going to place your trade over here, then you're at about 1 to 2.88, which I don't think is a favorable risk reward ratio personally for me. I prefer 1 to 3. It means then you'd be making minor adjustments to make sure that you're triggered at at a bit of a higher point, accounting for spreads as well for you to get a 1 to 3. But anyway, let's see how price plays out from there. So obviously we know that price came back into the POI already. We've seen it. We want to see whether it's going to trigger the 50% point. Okay, so we don't get the 50% median price triggered. We've got the imbalance satisfied. Price triggers this guy who's got his pending order over here. If you had your pending order right at the top, like we said at that time, you were missed ever so slightly by a few points, and then price would have moved in your direction. If you're the guy who was having a sell stop, waiting for this 50% to be triggered for you to activate your sell stop, then you certainly missed the trade. But I think you get the point now that this then becomes our confirmation entry because you've just seen a change of character, and then you're in when price prints this lower high over there and it moves in your direction to your take profit. Right, so I hope this has been an informative example. We're going to look for a few more examples to illustrate how to take these trades.